Well, guys, despite some selling around uncertainty from the government shutdown this afternoon, we really had a bullish week, which had October kicking off with a bang. As we covered on Wednesday, the market reaction to the shutdown was really a bullish one, with indices making new all-time highs midweek, key stocks like NVDA and Tesla breaking out from overhead resistance, and Bitcoin and Solana crossing key pivots to signal a bullish reversal. Bitcoin in particular has had a weekly downtrend on its RSI that it just broke out from, and if it can hold that into the close on Sunday, I really think we are soon going to see the next meaningful leg of the bull run. So, what brought about the weakness we saw mid-session on Friday today? And is it something that we need to be concerned about next week? Well, let's dive right into the charts for stocks, commodities, and crypto to discuss just that. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and I hope you all had a wonderful week. Before we dive in, if you do find value in the content, likes, comments, and subscribes are very much appreciated, and they really help this channel get off the ground. Also, it gets the content out there to more people. So the big question today is, do we need to be concerned about the market sell-off we saw this afternoon? And I would say no, because it wasn't a broad-based market sell-off. When you see all sectors selling off in unison, then I would say we can be a little bit worried. But this was clear rotation, and we have a few key hints as to why that was happening. Heck, even if you just simply compare the S&P 500 daily chart to the NASDAQ daily chart, when you compare those candle closes, yes, the S&P had selling, but it was not nearly as strong as the very heavy selling we saw in the tech-heavy NASDAQ. That had a much more bearish candle today. So the shakeout today was marked by traders rotating out of those high beta tech names and into defensives. Mega cap tech, semiconductors, they really took the brunt of the selling, with QQQ puts seeing heavy flows as funds hedged NASDAQ exposure. Now the pressure lined up with a modest uptick in treasury yields and the overhang of the government shutdown, which really wasn't a big deal at first, and now is adding some uncertainty because economic data is not being released, which makes projecting the Fed's policy path more challenging. I really don't know why we just can't stick with the thesis from last week until things get back to normal. It's beyond me, but the market can be a bit mercurial at times, so we as traders really need to work extra hard to stick with our thesis and convictions. But even though we saw selling in a lot of the names that we trade here, money didn't leave the market entirely. As I mentioned just before, it rotated. Utilities and other defensive sectors caught a strong bid, showing that investors weren't panicking, but were simply rebalancing. So the overall takeaway is that the selling looked more like tactical hedging and a bit of profit taking, I'm sure, in crowded tech trades rather than full-blown liquidation. So for traders, the key tell is relative strength right now. Names and sectors that held support into this rotation are the ones that are most likely going to lead once that risk appetite comes back in. Quantum. Sorry, been fighting this little cough here. So that thesis also checks out with what a lot of the charts are saying right now, because many of the names that we look at, they have plenty more room to run on the daily timeframes, but they are very overbought on the 4-hour. So a bit of a cool off would really make sense to reset those charts and then let them go on the next leg of this recovery. Now, I'm going to toggle back and forth today between the daily chart and the 4-hour time frame quite frequently, just to illustrate that point. And I'm also going to keep my charts a bit more abridged because there were a lot of chart requests from you guys on Wednesday's video, and I want to make sure I get to all those names at the end. And it's kind of fun to look at some new names. I haven't pulled any of them up yet, so you'll really see how I analyze a chart at a first glance and hopefully can apply some of that to the assessment of the assets that you're looking at on your own. So let's get right into those charts. Okay, so we're going to start here on the S&P 500. I was going to do a little bit of a study of market cycle tops, just because people are worried about sell-offs and they probably sell a bit prematurely. But when we see really end of cycle tops, they're not usually marked by a sharp reversal. There is a bit more chop and distribution before we really turn down. I'm going to skip that today. I'll cover it in another video because I really want to get into all the charts we have to cover. But if we look at the S&P 500, all in all, it was still a strong close for the week, even though we saw that selling. We have a bit of a doji candle. And this candle was not as bearish as what we saw on the NASDAQ. If we flip over to that, you can just see how the NASDAQ saw much more sustained selling pressure throughout the day, and it didn't really break the highs of the open quite in the same way as the S&P 500 did. This had a more bullish run earlier in the day, and then, overall didn't see quite the same selling pressure as the NASDAQ. Okay, just talking about semiconductors, I'm not going to look at all the names, but if you look at the charts yourself, you can see that between MU and TSM, one of those is really outperforming. So a little bit of homework for you there. But NVIDIA from this breakout, the good sign, we broke out on Tuesday, backtested for support, former resistance flipping into support, moved away on Wednesday, and then had some selling today. The good thing is, even with money flowing out of big cap tech and semis, and I don't know why the chart just automated that to disappear. Okay, internet issue. That is part of the problem with living in the woods. We're back. But this held the breakout, which is a good sign. If NVIDIA reverses back underneath this breakout zone at 185, that would be a cause for concern that this could potentially just be a fake out. But all in all, things are looking okay right now. And really, you got almost a secondary backtest today and a potential entry if you want to play this. And if you want all the price targets, we covered those on Wednesday. So check out Wednesday's video for all the overhead price targets for this breakout. Now, I want to flip back over to XLE real quick, the energy sector ETF, because we saw that strong breakout. And this week, it really reversed back under the breakout zone. And the question is, should we be concerned that this is a fake out? And I would say it is too soon to call right now. Let's see how this does next week. We are still in the upper band of the confluence model cloud. But the thing I like to look at in meaningful runs up is I like to define where the RSI is finding a base. And for XLE, it seems to be finding a base and resetting at about 41.5, where we have all these bounce points in the uptrend. I don't think this broader uptrend is going to come to an end until you see the daily RSI break below that 41 level. And so just like we draw trend lines on charts for underside support, you can also draw trend lines on RSI for underside support. And when that breaks, that can be a lead for you. I think we've looked at that in Solana in the past in strong uptrends. Now, this is not the most traditional way to draw a trend line, but since we had that big bit of panic selling that is just out of character with the rest of the price action, I give myself some tolerance to draw trend lines for an uptrend based off of the more, let's say, balanced price action after an extreme fear bottom. And we have not broken this either. I just use this as an early lead for the trend potentially turning. If we break this trend line, that would most likely correspond with also breaking down with that 41.5 on the RSI. Okay, gold is still doing gold things on its way to the $4,000 target, even though things are extended on the daily, on the weekly, on the monthly. It really seems like gold wants to get to 4,000, so not much more to say there. But if we switch over to silver, this one has finally gotten to fresh all-time highs. I think 14-year all-time highs today at $47.97, almost $48. Oh, we did. We breached $48 an ounce. Congratulations, silver. But if you have been here since the beginning, since this consolidation way back in June, actually, since this breakout, really, we were saying that $45 an ounce was the target, and we exceeded that. And you might be thinking, silver is doing great, but I just want to bring this all into context. Let's look at the monthly chart really quick to see when we last had those all-time highs for silver, and that was Friday, the 1st of April, 2011. So 14 years later, we have made it. And also, if you were holding this since the 80s, 79. But if you were holding silver since the 80s and you thought you were so smart for getting into this, you are finally back at even for buying in late 79, early January 1980. What a long time. So even though gold and silver have been outperforming this year, they've seen historic runs, I think it is worth comparing them to their historical performance, to how they have performed against the S&P, how they have performed compared to M2, and you will see that even though they do good in periods, and it really pays to be in these assets at obviously points like this, points like this, points like we've seen right now, generally speaking, these are not assets that you want to hold in your portfolio long term. Just when there is a flight to hard assets because of that fear in markets, that's the time to be in them. And outside of that, you should be in higher beta names, at least in my humble opinion, in your portfolio. Okay, looking to Bitcoin, and I am starting here on the weekly because the weekly is really the important time frame, and I want you guys to pay attention to this on Sunday night because there is a chance we might have our highest ever weekly candle close on Bitcoin, which would be exciting. But beyond it being exciting, the thing we're seeing is this breakout right now from the weekly RSI downtrend. Anytime this has happened in this bull run, in past bull runs, when you see the weekly RSI downtrend broken, that corresponds to the next meaningful run in the bull market. So you can see that break there, next meaningful run. We're about to do that just now, even if we go back to this 8 months of consolidation. And I won't go back to the two previous ones or 2017, but you can chart this for yourself. And then we really have this green line to tackle, which is the downtrend on our RSI, which is printing this massive bearish divergence. If we can negate that by breaking through this green line in the next couple of weeks, that would get us, in my opinion, to the parabolic phase of the bull market. And if that happens, we really have to ask ourselves, are we in a normal 4-year cycle for Bitcoin, or is this cycle going to extend? And the pace at which things have been moving right now, and just seeing how things are coming together from a regulation perspective, a corporate and institutional adoption perspective, banks adopting crypto rails, that is all telling me that, we still have the Clarity Act that needs to pass this fall, hopefully. That's all telling me that these things are going to take some time to come together, and there's probably going to be more money flowing into the space early next year. So I'm open to the idea of an extended cycle. But if this really runs and has an explosive move, we are getting into that timing where we're at the 1100 days or so in late October, early November, where we need to be a bit cautious. And there's also a third scenario. The 4-year cycle could stay intact if you measure it bottom to bottom, and perhaps it just runs a little longer. So maybe we see a run up into November, some natural selling from everybody assuming that the cycle is going to stick with the same timing, only to see a little bit of a sell-off towards the end of the year, beginning of next year, and then another meaningful run as that adoption happens. And then a correction could still get Bitcoin back to a bottom on track with the traditional 4-year cycle. Who knows? It's too early to call, but I think it's interesting to at least entertain some of these ideas so we can react and kind of game them out in our mind as we get closer and we get more signals from the charts. Okay, moving on to the daily time frame for Bitcoin, you can see that we also had a breakout of this downtrend on the daily RSI that we have been in since the middle of July. So that's a good sign, and we're already getting up to the top of the range. So it seems like a little bit of a cool off would be healthy for this. But once we get to the top of the range or we're in an uptrend, you can see that the daily can stay elevated for quite some time before cooling off. So just because we're getting here doesn't mean we have to correct right away. You can just imagine how this could do something like this, anyway, before eventually cooling off for that next bit of correction. So the daily looks like it has a little bit more room to run, but we are also into the upper band of the confluence model, which we just rejected from today. We have the confluence model center cloud right here around 119,000. So for the best sign of strength in my mind, and going off of these previous peaks right here, the strongest sign for Bitcoin if we see a cool off would be to bounce from that level, to keep us in the upper cloud, to not break below these previous peaks. That would be the best sign. Now we can dip a little bit below that and still be okay, but again, that's the best sign of strength. And then we would be looking to the 4-hour chart to see if the 4-hour, which is fairly overheated already right here. We are in the confluence model upper band. We're just completing our first swing. But will this have reset the 4-hour chart enough so we can go on to another run? So the 4-hour is really screaming, need to cool off soon. These upper bands, of the confluence model, though, sometimes can take a couple of swings before you really see a correction. So we just need to keep our eye on this and see what it does into the close on Sunday. But where that confluence model center band is not too far off with that 119K. That would still keep us in a strong position overall, and that would still have us holding the weekly RSI breakout. Just going back to the 4-hour really quickly, if we do break down further, I would love to see 115K. These previous tops and all these bottoms here, if we can't hold the peaks at 119K, 115K, 114 to 115K, I guess we could just consider that a range, would be an ideal area of support below that. And, then we just take it level by level from there. But I wouldn't want to see this correct quite too much, especially to have a strong weekly candle close and to hold that RSI breakout. Okay, looking to Solana on the daily chart, and on the daily, we still have a fair amount of room to run up on the RSI, so good sign there. We are back in the confluence model upper cloud. So if this is showing us extreme strength, any pullback would bounce from around 220K to not drop too meaningfully below there. That corresponds with this previous peak right there at 219. So that would be a first zone to look out for support. But we can look to the 4-hour to give us a bit more of a guide. And if we look at the 4-hour, this is really saying that we could potentially correct all the way down here to 205,000, which seems crazy, but it would really help the 4-hour reset. The other reason I'm thinking this could be a potential target, if we draw a trend line underneath, this looks very much like a bump and run pattern. So in a bump and run pattern, you have one pace of the trend, and then you have the bump phase, and then you have the run correction phase. And the way you measure out a target for where a bump and run pattern should land is on the run into the bump, you look for the middle of the congestion zone between these previous highs, these previous lows, and that also puts us at $205 per Solana. So we may not get there. The thing that would really confirm this is if we correct and then we break down from this trend line. And what do you know? The point where we're intersecting that trend line, depending on how this plays out over the next couple days, will probably be around that $219 to $220, which is the other support we were looking at. So we now have two scenarios to look at. You could say, if we bounce from here, then that's bullish and I'm going long. And if we break through, then I'm waiting and I'm seeing if we get support at $205. Really easy. And just to look at this in the past, because we've had a pattern like this play out a couple times on Solana. We had a bump and run pattern right here, and even on this previous one. And you can see how that played out, got right to the middle of this congestion zone. And we had another one here. We can just draw it out for fun so you guys can see how it works. We draw our underside support. We have, our normal trend of the price action, the bump, and then the run and retracement. And where does that land? Well, we just go right into the middle of our congestion zone between those peaks and the previous bottoms, and that gives us our price target. So very reliable to measure out, but you need confirmation by that major trend line breaking down, and then you can assume that lower price target. So we have our two price targets if we see a pullback, and we know what to do in each scenario. And if we see a bounce, we know we can potentially get long if you're playing perps or just want to get more of a position. Okay, just looking to ETH really quickly, and you know what, let's start on the daily just because we were starting on the daily on the other time frames. So we are stuck between a little bit of a resistance and a little bit of support. And what I mean by that is the daily time frame has room to run, but we just rejected from the confluence model upper band right here. So on the daily, this still has some more work to do. But if you look at this on the 4-hour, you would say, oh, this looks a little bit more bullish because we just broke above the upper band here. And we're holding it for support right now. But I have a sneaking suspicion that if Bitcoin pulls back and Solana pulls back, this is also going to break down. And the 4-hour RSI is very much extended. So we want to see this reset so we can go for the next run on the daily. And we're very much at a key support right here at the 4,440 level. If we just draw a horizontal line across, you can see how we've seen a lot of congestion here in terms of resistance and then support, and then a little bit of resistance with one candle and support again. So if this fails, then we need to look out below and see where that next zone would be for us. And I would say, just looking at the recent price action, my next target would be right about here at 4,233. We can just say 4,200 for round numbers, but you can see again how this is an area of congestion. We see a lot of consolidation around that range, some support, support, and then resistance. So we're assuming, since this was just resistance, that this again would turn into support for us. The last thing I'll say for Ethereum is that it really was showing more weakness in this pullback, and it has recovered quite nicely. A lot of strength coming back into Ethereum. So don't be surprised if this has another run of performing well, just judging by how it has recovered right now. It is closer to its all-time highs. Well, actually, let's see how far it is from all-time highs percentage-wise if we compare that to Solana. All right, so we are about 10% away from all-time highs. And if we go back to the Solana chart, and we have to compress this because we haven't gotten to all-time highs yet, but I guess we can just measure it off the numbers because we remember it was like 296. Let's just bring it in. Let's be accurate. Why not? All right, so Solana, current price, up to all-time highs. We have 28.3% to go on Solana. So if we're assessing relative strength, not just in the rebound, but in terms of distance from all-time highs, Ethereum has played some catch up. It's really doing it. Okay, looking to MicroStrategy, which has been weak. You know, we were in this daily downtrend. Now we broke down from this trend line. I think we talked about this. Oh, I forgot to cover MicroStrategy on Wednesday. We talked about it last week. This trend line has been playing support since early September 2024. And I got into a little position here because the daily was giving us a mean reversion dot. The RSI was to the bottom of the range. And then I got stopped out. I had an automatic stop limit order that sold my position. And I would have thought that we were going down to this 284 range, the next support, potentially breaking down further. But it has reversed back. I'm always a little cautious when you see long-standing trend lines like this break. But it's a good sign that it reversed back into the range. Now, we did reject today from the 200-day moving average and the key overhead resistance. If MicroStrategy can get over this last hurdle next week and get some daily candle closes, then I would say this really looks like it's going to recover. And that level is at $358. Let's just say $360. And that's where we found all this previous support right here. Then we had our breakdown, and that's been resistance once, twice, third time now. Oh, you know what I'm going to say? Fourth time breakout. I should be a bit more excited about that. I just feel like a broken record. I'm just thinking with Bitcoin overheat, if Bitcoin cools off, if we see a pullback and bounce off this trend line again, or even if we bounce right here at 342 and come back one more time for a breakout, that could actually be a good play for a fourth time breakout. So MicroStrategy's given us a setup for the first time in a long time, even though, you know, I'm a bit cautious when I see this. This, if it can do a fourth time breakout after Bitcoin corrects a little bit, that would be a great sign. And then I would say, you know, a lot of people are bearish MicroStrategy and they say, oh, it never made a new all-time high in the last bull run, so it's not going to do it this time. We don't know that. We have to go with the flows and the price action. If we have a bullish fourth time breakout with a lot of volume and follow through and Bitcoin is running, why would you not get on this, you know? And maybe it's at good prices right now because the sentiment has been so terrible. So keep your eyes on this. I think this is a great opportunity to consider for next week. All right, Tesla. I'm just going to look at Tesla for the very short term. I mean, I guess we can look at it on the daily because it is a very similar setup to everything else. Daily RSI oversold way over here. Now we get to overbought. We have a mean reversion dot. And we're starting to potentially correct a little bit. If we look at the 4 hour, the 4 hour was overheated already, was correcting through this consolidation, and we got some mixed signals on Tesla. So we had a breakout midweek, which when you have a flag like this, you would assume is bullish. And I was talking about price targets at 500 or just above on Wednesday. And then they had the report of their sales numbers come out with an initial bullish reaction and then a sell the news event. And that selling, even though it looked like it was maybe holding the breakout support, that selling continued today because of the broader selling in tech names. Now, it looked weak. And if we look at the weekly candle, you would not say that's a bullish candle. That looks, with that long topping tail, looks like a very bearish candle where this needs to cool off for a little bit. And actually, wow, our weekly RSI is really getting to the top of the range. We haven't been there since that peak in December, but we can obviously go higher on the weekly. We could just be in this period right here. So yes, that candle does not look bullish, but we have a few things to pay attention to here on the short time frames that I think are worth paying attention to. We bounced off the support of this range, and we really rallied into the close, which is a good sign. We obviously have the top of the range's resistance overhead, and that is also coinciding with the Confluence Model center band. So that's a real hurdle overhead at 445. Today, we had a lot of option support around the 430 level that gave way, but the key 420 zone really stepped in with support. And then the other bullish factor is we've been holding this 4-hour RSI uptrend since the bottom in August. And if that is not broken and we bounce away from this next week, I'm still on camp one more run, or camp double pump. And what I mean by that is when you look at Tesla and we get these daily overbought conditions, let's just look back in history to see when we see those. We had one right here in May, and then we sold off a little bit and got into this period of consolidation. If we look before the December run, we had another period here and then cooled off a little bit before some consolidation and continuing on. But we also get scenarios like we had right here after the election where you have a run up, and then you have some consolidation, and then you continue in one more leg higher. So that's what things looked like midweek till we got this correction, but we still haven't broken down from this range. So we just need to watch this next week. I would say, if this range clearly fails and we break down, then okay, correction, look out for support at 380, 385, maybe as low as 370. If we break down from that range. But if we bounce and we break above 345, then I would really still consider these higher targets of 500, even up to 535 in play for the near term. And then I would expect some cool off. So, Tesla is its own beast. It runs off options, off sentiment, off what Elon's doing. But it's not out of the question that it can do these irrational things and move a little bit more than you would expect. Okay, starting with some of the fintech plays, and Hood had a massive week. This thing just continues to defy gravity. We are almost at $150. We're all-time highs in terms of the daily close, the weekly close. It just keeps on running, and I don't even want to project it out. But if you're saying that this right here is a flag, I don't want to get that crazy with it, because that's would be quite the projection for the Hood price target. But anyway, defies expectations, just keeps running, doesn't give you a chance really to get in outside of some small little pullbacks, and then just keeps moving away. So yeah, Hood is outperforming. I am still holding my position. I sold covered calls too early. I have a lot of time for them to expire, but I'm hoping for a pullback so I can load on some more shares and I can unload those covered calls without taking a loss. But, we'll see. I still can't be mad about this running, but we want to look at some of the other names. Okay, let's look at Coin, and my heat just kicked on, so hopefully that isn't too loud in the background. Coin has had a very nice recovery. The calls we got in down in this basing pattern and at this low are doing really well. And the question is it time to take profits? Because if you look at these fib extension levels that I drew, we are just into the 786. We are into this previous peak right here before all-time highs. The all-time highs were 100% extension from the run up from 2023. So it's really been playing by the levels. Even the support we got right here, it just really respects those fib levels, as you can see by all these real areas. So what do we expect? And if we bring up RSI and mean reversion, we are sure getting to the top of the range in terms of RSI. So maybe this cools off a little bit, but I don't think it's the end of the run. And the reason I say that is because we have this underside uptrending support on the daily RSI. And you can see when coin runs, this underside RSI support is really worth paying attention to. And only when it breaks down is when you really start to correct. And we have validated this current one with many more touch points. So if we do cool off, I would expect a bounce from that point. But if we do look to the 4 hour in contrast, this is definitely overheated. And we should expect perhaps a little bit of a correction or some cool off. So we can give ourselves some targets. We generally, I would say, wouldn't want to break below 335, 336, this zone here, to maintain these highs. And let's just see how that aligns with some fib retracement just of this local range. And this might have to be adjusted if we run higher. This is just assuming this is the local top. And those fib levels actually align pretty well. And that 338, we were saying 335, 336, 338 is the current 50%. So if the 50% holds, that is a strong sign for a bounce. If we get down to the 382 and bounce from 326, not as strong a sign, less of a chance of making higher highs on the next swing for coin. Okay, one I don't think we've covered before, but then I'm in from IPO shares and a little bit of a purchase in this basing pattern is Gemini, GEMI. And, crypto fintech has been hot. This is at the intersection of those narratives. It definitely sold off from the IPO. I got in at, what was it? It was about $33 a share, something like that. So we're below that, but with layering into it, my cost basis isn't bad right now. I think I'm at $25, so almost in profit. But the good thing today, we started, even though it looked like it was breaking down a little bit, first subtle sign of strength. We made a higher high compared to the last swing that we had here on the 29th of September, right there. So slightly past that. Now, if we pull back, I would just want to see, can we make a higher low? Can we hold, say, 23.77? That would be an awesome sign of strength because we'd be bouncing off those previous peaks. And this could be on its way to recovery. So if you're not in this one and it's something you want to be in, this is when I start paying attention. It's like we're making lower high, lower high, lower high, lower high the whole way down. First higher high. Okay, great. First sign of recovery. Now we need to print that higher low, and then we can be off to the races. And if you see that happening, that is most likely going to be your best and highest confidence entry in this basing pattern right here. Okay, moving over to HIMS, and we have been finding quite a bit of resistance actually at the confluence model upper band into the upper band, so the upper band of the center cloud. And we had quite the sell-off on HIMS today. And the question is, does this have more gas in the tank? And if you guys recall, I got into my options down here. I've been faked out a little bit by these breakdowns. This one today, the candle, you can't say looks bullish, but I was always of the mind that we would, after breaking down from this trend line that's played support since earlier this year, since when is that? April, that we would come back up to back test this for resistance before correcting. So I thought, we'd get into it and then have our cool off, which would make sense with a lot of the previous peaks that we have seen. There's just been a ton of selling pressure coming in this range around $65. So I don't know if we'll rebound next week, but maybe the 4 hour can give us a little bit of a clue. And it would make sense to look at this in terms of the daily and 4 hour RSI as well. So our daily RSI really isn't overheated. It hasn't been overheated since this run up in May. We haven't really gotten to the top of the range, but we have been printing mean reversion dots, but we're not extremely reverted from the mean. These are very mellow, I would say, mean reversion dots. So the daily, I'm not too concerned about, even though it might reset a little bit. But let's see what the 4 hour is telling us. And the 4 hour, we were already in the upper band. And see, I haven't looked at this on the 4 hour, but we took swing 1, swing 2, swing 3, and now we broke down, which normally means that we're at least going to test the bottom band and chop around, and then could maybe run higher from there. If we break down below the lower band, then I would imagine, more of a correction, and we have the 200-day below us again. So something to look out for. But the 4 hour RSI is already almost to the bottom of the range. Mean reversion isn't quite there. So that thesis kind of makes sense. Maybe we see a bit more of a sell-off next week, and we get into that $48 range. We have this big volume cluster here in the VRVP, at least based off the local price action. Let's bring in a little bit more to help us sharpen that up, because the VRVP is based off of what you see, the visible range volume profile, what we see on the chart. And that's actually our most traded zone right here at 50. So we were saying 48, maybe we wick below it, but I'm going to set an alert at 50. And that could be an interesting point, corresponds with these previous wicks, to add to a HIMS position if you would like to do that. And then, we're looking to resistance overhead. So for me, it's just playing short-term swings on this one. Because it is moving quite a bit. Okay, moving on to Circle, which has made a nice recovery this week, and the options that we're in on this are doing really well. And just in terms of positive structure, we made those same higher highs, higher lows. Again, a great entry, just showing you that reversal in structure. First time in this whole downtrend. Lower high, lower high, lower high, higher, higher low. Change in structure, another higher high. Great. So if you can get in at this higher low entry, that is one of the best entries you can get on a recovery. If we're looking at the daily RSI, we have plenty of room to run, but we are into this overhead resistance. This is our third time touch point, and we rejected a little bit. So I'm anticipating a bit of a rejection and then a fourth time breakout. So you might get another shot at an entry, and I would be looking to this 134 range as a pullback because that corresponds to our 382 level. These previous peaks right here, you can see it's just been really respecting a lot of the price levels. So look out for that next week if you get a pullback into that. We're at 146 right now, so about a $10 pullback on Circle. And the 4 hour would correspond to that thesis. If I just square this up, the 4 hour has given us a mean reversion dot. We touched the top of the range. Last time we touched the top of the range, we did cool off a little bit. We haven't gotten like crazy extended on this like we have in the past after the IPO. But I like these more measured resets, and I wouldn't imagine this would reset all the way. So just look for that little pullback. Maybe you even see a little bit of support above 135, maybe at 137, 139, somewhere in that range. And then we attempt that fourth time breakout. And if you do get a breakout, you are looking for this to confirm with volume. So we want to see a big volume candle to confirm that as a legitimate breakout. If you don't get a volume candle, if the volume's really low and sad, then that increases your chances of a fake out and this just being a bull trap. So hopefully that won't be the case, but another one to look out for next week. So MicroStrategy could have a cool breakout. Circle could have even more of a breakout. So some exciting things to watch out for. And we still have that $200 price target from the falling wedge pattern to watch on Circle. Okay, quickly looking at CoreWeave, which has been chopping around the 50% a little bit, flirting with that breakout. This is really the zone where the price action is drawn to in a range. And I'd love to see us get definitively into the upper half and break this previous high at $150 right there, which also aligns with our 618 fib level right there. So it looks like we have room to run. Actually, at that fib level, we're just starting to get the daily confluence smaller cloud to form. So that corresponds to this previous peak, definitely being a point of resistance. Our RSI on the daily is elevated, but it can definitely go higher. So I'm not too concerned about that. And we don't get mean reversion data on this yet because it is so new, but CoreWeave is seeing a lot of adoption, that Meta partnership, and we're not seeing a slowdown in demand for AI compute. And if we go to the 4 hour, we can get a bit more information from this. Now we've had some mean reversion dots on the 4-hour, and we've actually had a bearish divergence. So is this perhaps the point where we see a little bit more of correction before attacking this again? That definitely could be. We've had 2 swings in the upper band here, and we know it's normally 2 or 3 swings, and then you can see a bit of correction. So the better sign of strength for me, even though we're seeing this bearish divergence, is if we could take another bounce next week, and if we could just pass those highs by a little bit, which really would coincide with where the upper band of the cloud is going here on the 4-hour, that would be a great sign of strength for the structure. Then we can cool off, we can find our higher low and be off to the races. So that would be the ideal. And if it corrects here, it's not the end of the world. We just need to find that next base. And it's just saying that this is going to need some more time to recover, and may chop around for a bit before taking the next move up, which then you could see as an opportunity to position if you're not in it already. So a couple scenarios there. Not looking as strong as the circle chart, but I do still think that this one is going to perform well this fall, and I think especially early next year. If the bull run continues, I think this is one of the names that could definitely catch more of a bid. Okay, I'm not going to cover all of the crypto treasury plays. I'm just going to cover off on UPXI, because UPXI really had a nice reversal. We've been in this massive wedge pattern, and it faked out after what was arguably strong structure, faked out to the downside, and then started coming back up and gapped up into it, found support, and now is finding resistance. And these kinds of symmetrical triangle patterns, they often can deviate in either direction at the end. So the question is, are we going to get our breakout or not? And so we can look to the RSI to give us a more of a guide on that, on what we could expect. We're squarely on the daily in the Confluence Model Center Cloud. So we haven't even gotten to the upper range. And if we bring up the RSI on the daily, we actually have a lot of room to run on the daily RSI. Let me just flip these. I normally like to have mean reversion up above. So lots of room to run on the daily, and that upper band for resistance isn't till almost $10. So that's a good sign, but we have some near-term resistance, and this is our 3rd time touch point. So are we going to reject one more time? We will have to see next week. On the 4-hour, we have been a bit more extended on runs up in the past, but we don't normally get too far past this point. So this is one, again, where the daily looks like it has room to move, but the 4-hour is soon going to give us a mean reversion dot. Looks like it needs to cool off a little bit. So I could see 2 scenarios. I think the more likely, because we rejected from 2 candles here, is a bit of a pullback. Maybe we find support at 660 or all the way at the lower band at, say, 630, and then we attempt to break out again. Or we have one little more push up above, back test this for support. That cools us off, maybe chop around, and then move from there. So we'll have to see how this plays out. You know, overextended a little bit in the near term, but in the longer run, at least from this recovery and from what the daily chart is showing us, I think this definitely has more room to move. Okay, last bit of charting for the day, and that is the quantum space, which continues to defy expectations. After this run up and hitting our price target of 31, you guys know that I already sold my options. I'm still holding my spot, and we broke out of this. And if this is a true, a flag pattern with 100% extension, we could see almost $48 on RGTI. Now, the daily is very overheated. I imagine the weekly probably is too. Yeah, the weekly's getting into that territory, which is similar to this run-up that we saw in November. It can still go for another couple of weeks. So yeah, don't fade the quantum space when it really gets moving. I'm surprised that this continued to break out. Wish I still had my options, but we can only make the best decision possible with the information we have at the time. We can never see the right side of the chart. So I'm not kicking myself because it was aligning with the TA, it was aligning with the price targets, and luckily I still have that spot as a runner. But let's look at the rest of the quantum space really quickly to see if there are any other opportunities out there. So we can look at IONQ, and this one has still not hit its price target. So it fell a little bit short, so not as strong as RGTI at 76, and percentage-wise this wasn't as much of a gain. really pulled back, and I'm sorry, I'm on the weekly again. We consolidated for quite some time, so hit its, didn't get quite to its target, pulled back. Now it's moving again, so I imagine we're at least going to hit that 78 target. But if we break out from above this point, we could also run an extension for where this might go. And, you know, if you're conservative, you would take it from here. If you're aggressive, you would take it from this swing low right down there. And we can just project that on as 100% extension. That would take us to 96. So I'm just going to keep that on that chart, and let's keep running through the names. Then we also have QUBT. Whoops, I can type. You know what? Let's do QBTS first. QBTS. My mic is right over my keyboard, so it makes typing a bit challenging. All right, this one also broke out from consolidation, just like RGTI. And this has a similar price target. And again, I'm going to do the conservative price and time extension as opposed to the aggressive one, and take just that last swing. And so this would put us also around $38. So still a bit of room to run on this one. If these pull back at all next week and you want to try for that momentum play, it could be worth it. Daily is in similar shape, and if we compare the weekly, it still has room to move compared to this last run up. But the quantum space, it runs hot in both directions. So after massive moves like this, just be careful and get ready for a correction. This isn't something you want to, at least in my opinion, want to get into a long-term hold position with this right now. You want to be nimble, ride the momentum, and then unload it. I think these will have massive values one day, but we need to see who the winner is going to be. And if there's ever a bigger correction for the sector, that would be a time to look for value positions. But right now, not the time to get into those longer term hold value positions. And then last one would be QUBT, which I am in calls on. And this one has been lagging. It was lagging on its wedge breakout, and we just started moving. And the price target on this one, there's a cup and handle in play, and there's the wedge target. So the cup and handle target is about $40, and then the wedge target is at $45.50. So we still have a long way to go to there, and we just need to let this one play out. This is the weekly chart right now. Not even close to overheated on the weekly like we were in December of 24 when the quantum space had its first run. And if we're just looking right now on the daily still has some more room to run. The 4 hour would probably suggest 7 candles up on the 4 hour, a little overheated. So maybe we see a correction and we retest that breakout range at $23 or even down to $22 next week. And if you're not in it, that could be a point where it might make sense to get a bounce play and see if we can hit those price targets. Okay, it's time for the chart requests, and I am just going to run through this, honestly, without even editing this section, just so you can get my full reactions and see how I take these at a first glance. So the first one on the list is SoFi Technologies, and let's start on the daily. Oh, SoFi is one I have charted before. Okay, on the daily, we have been cooling off, and the chart has been doing a good job of resetting the daily RSI. Obviously, getting all the way down to 30 would be a better sign. We just closed below the Confluence Model Center Cloud, so this is telling me that it could cool off, a little bit more, and then you could look for good entries. I had this alert set here at 1886, I think just to make me aware if we ever got close to these previous highs. We had oh my gosh, look at this. We were mapping out a breakout price target. That's right, it had a cup and handle. I forgot about this one. Had this massive cup and then the handle, and look where the price target is and where we got to. Exactly at that $30. It's amazing how TA plays out. I haven't looked at this chart in a couple of months. I should have been paying attention to it because that would have been a decent little play right there for that 33% or so to the upside. So yeah, congratulations if you got on that. Right now, I would just give it a little bit more time to cool off. I mean, we can look at the 4 hour. The 4 hour is just getting into the lower band. If it bounces here next week, that's a different story. But this looks like it wants to cool off a little bit more, even though the RSI is to the bottom of the range. mean reversion dots, I mean, maybe you do get a bounce. Maybe this ends up being really strong because you are also into this previous peak right here, this peak, the middle of this congestion. So it could bounce. Still, even though it looks like it could bounce, this isn't a place where I really have an edge in terms of some kind of pattern or breakout I can play to give myself targets to the upside. After a move like this, even if you see a bounce, there is a chance that it could just, chop around and tighten up before it figures out what it wants to do. So is it looking terrible? No, but it's also not looking like the best and most clear opportunity. This breakout of the cup and handle, if you would have caught it, that would have been a much more clear play. Okay, next request is ASTS Space Mobile. And I'm just, we could pull this up with the confluence model. I guess I'll keep the confluence model on. I was thinking, should I just look at the raw price action or should we keep the confluence model on? Daily RSI is overextended. Mean reversion could run more, but we are also into resistance on the confluence model upper band. Guys, I get a lot of these requests for charts that look like this. And yes, they're in blue sky breakouts and they can run irrationally, but you don't know how long. And they're really overheated. I would really encourage you to look for subtle signs of strength earlier on. Like if you're watching this in this consolidation and we're consolidating here and you get these first higher highs and then you get some higher lows, this should be the point where you look at entering and also where you're not as overheated on the daily RSI. This pullback could have been a good play, but if you miss this pullback right here to 36, and the bounce, which bounced quite a bit above the 200-day moving average. Now, what's your edge in this trade? Your only edge is hoping that it keeps running. And the candles have gone vertical. You're at some point in a period like this, and then you're going to see consolidation eventually. So wait for consolidation, wait for a pullback, try to find a smart entry, but don't chase names like this because you're just going to blow up your portfolio and lose potentially. I'm not saying you're definitely going to because stranger things have happened and it could keep running, but you don't have any guarantees of that, and there's a good chance this will pull back. Okay, next one is LAES. What do they do? Seal SQ Corp. I have no idea, but let's just look at the chart. Okay, a little better in terms of structure. It, obviously had a strong end to the week. Our daily RSI and mean reversion are giving us a dot. We're into the upper band of the confluence model, but this is squeezing, which indicates that a volatile move, more volatile than we've seen the last few days, could be incoming. Here we had extreme squeezing before something like this, but there are subtle signs of strength here on the daily. In terms of these lows, you made higher highs, a period of higher lows in this consolidation, and now we haven't really made higher highs yet. Even though the chart's overheated, what I would do on this one is I would look for a range breakout because you have a lot of even highs right here. If we just map out across these, fibbing it a little bit because this first one didn't really touch, but it's within tolerance. It's maybe going to go for that fourth time breakout next week. The only problem is that we're already getting mean reversion dots. I guess, RSI can stay elevated for a time and can go higher. And we are squeezing. So yeah, keep your eye on this one. If this does break out with volume follow through, even though it's overextended and, an entry down in this range when we were getting support would have been much better at 250. What are we at now? 483. You could see another explosive move. I don't know what this one does. It'd be worth researching too, just to see if they've got any contracts or, anything interesting happening in their space. And then if you see an explosive move, you would hope that you can pass these previous peaks that you got back here in December of 24. So you're a little late to the party. You've already had, not quite 100% gain, but pretty close. But there could still be something interesting to come. All right, next one is AXON, Axon Enterprises. Oh, we have looked at this one before because I have fib levels up on it still. Let's go into the weekly. Oh, these are actually fib extensions. Cool. All right, let's look at this here. On the weekly, we're above the 200-day moving average. We've been in a period of consolidation. You could argue that you have swing 1 here in the weekly, swing 2. We've almost gotten to the 100% extension from this first move. So that was measuring this move out and then projecting it onto here. So it could go a little bit more if we're just judging by the weekly. Where do we have earnings coming up? On the 3rd of November. So we have a little bit of time for earnings. And if we're measuring to the upside, if we will hit the 100% extension from where we closed today, 28% to the upside. If it goes really crazy and we hit the 618, you'd have 65% to the upside. Let's look at the daily. The daily is starting to squeeze. Okay. So we went through our daily trip. We're consolidating in the center band. We're actually in the lower band, but we're just barely holding it. But this squeezing normally indicates that a volatile move is incoming. We have a trend line down below. I think it's been a couple months since someone requested this. So we put this trend line in going back to August of 24. We don't have a third touch point yet. So from this squeezing, the question is this going to cause us to break the range, or are we going to come down and are we going to bounce from, say, the $640 level? But some kind of move is incoming. We're still in a daily downtrend, at least just locally. We had this gap up on the last earnings, and then the reaction hasn't been that strong. Daily downtrend, and no trend reversal is confirmed. We could still see this continue a bit till things shift, or you could start to see that bounce now. We can look on the daily to see what we just got. A mean reversion dot, so that's a decent sign. RSI could go a little bit lower, but I bet you the 4-hour is probably, the 4-hour is already in the process of turning around. And did we break into, we're trying to break into the center cloud and find support there. So some little subtle signs of strength. It could still correct a little bit more, but on the weekly, this thing's definitely extended. On the smaller time frames, it could be turning around and you could have a little bit of a move to the upside. It might be worth, if it does turn around, playing it with options because the percentages aren't that great to the upside, but not an uninteresting chart, let's say. You could argue that this is kind of like a rounding top distribution pattern. So let's just see. I'm actually going to add this one to my watch list because it seems interesting. All right, next on the list we have ALAB. And I need to go a little quicker because I got to get to sleep for some group classes tomorrow. All right, ALAB. Let's see here. We must have brought this up in the past too because we drew our fib levels. On the 4-hour, we are middle of the range. We look to be recovering. I'm just going to draw some underside trend lines. Okay, so we definitely, had a breakdown. I suppose you could. Sorry, it's being a little sticky. You could try to square something up there and say you deviated from it, at this one point right here. But I think just going with the real thing is better. You're finding support at this Confluence Model Center Cloud, a little pullback right now. Again, this thing's pretty darn elevated. I don't know enough about what they do. Could it run more? Sure. The general structure is fine. Higher high, presumably higher low. Then are you going to make another higher high, or are you going to go into a consolidation range? Daily, let's look on the daily. Oh yeah, we bounced from the Confluence Model Center Cloud on the daily, but we've already taken that swing 1, that swing 2. Could it take a swing 3? Sure. But this feels, in terms of the move, if you would have gotten in way earlier or bouncing from the 200-day moving average, that's when you want to get in these trades. Now you're just chasing a few percentage points at the end with much higher risk to the downside. So, okay, maybe 30% if you get back to all-time highs. And if we touch the 200-day moving average, 42% to the downside, almost losing half your portfolio if it drops this level potentially. So the risk to reward when things are elevated like this, that's just not the charts I like to trade. All right, next on the list is AMD, which we haven't looked at for a while. On the daily, we just went through the upper band, center band, finding some resistance. This seems like it's going to consolidate for a bit if I had to put my money on it. Breaking back into the upper band would obviously be a better sign of strength. We do have a, mean reversion dot on the daily. The 4-hour probably also rejecting from the top band. We're getting into a squeezing pattern here, so it means some volatility is incoming. The 4-hour got pretty extended on this, so probably see a little bit more of a correction. And your first warning sign is if you would break these lows right here on this correction, then watch out for more downside. But there is a good chance, just if we're looking at this on the broader scale, so you've had this massive run up, this could just be tightening, and that could continue for, another couple of months, potentially, until it makes a decision. It doesn't have to go that long, but it doesn't look like the thing that's going to move right away right now, but I'm happy to be proven wrong on that. All right, next on the list is Meta. And Meta on the daily seems to still be correcting a little bit. We haven't gotten a mean reversion dot. I would say where this confluence model center cloud is coming in at 687, that might be a good target. It would correspond with these previous lows here. If you can hold those or bounce just above, that would be a decent sign. So you could be scouting an entry for this soon if you want to get into Meta, if you think there's much more upside in the near term. We're still squarely in the weekly cloud upper band. And on the 4 hour, we're in the start of a downtrend on the 4 hour. So again, like I normally say, we take at least a couple of swings in the lower band. So if this is swing 1 and back test, we're probably in the middle of swing 2. Maybe we take a swing 3. Got the 200-day coming in. You have that other support from the daily center cloud. So look out for a turnaround soon on this. But you also have, I guess it's not really a double top. It's a little bit lower on the second price point here. You could argue that's a double top. It's close enough, and we broke below it. Let's just measure that out, and then we take that to our breakdown. That would put us actually just below the 200-day moving average. That would be at 650, let's say, if we hit that double top target. And that actually makes sense with this previous consolidation range right there. You know what? Meta got me thinking about this. This wasn't a request, but I'm just going to pull up Netflix because they got beat up this week on that Elon tweet and all that cancel Netflix business. And actually, gosh, this on the daily looks kind of bearish, if you're asking me. I mean, look at this. We went through the upper band, rejected. Now we're in the lower band, and you would have to assume that we might correct that. I mean, perhaps you find some support at the 200-day moving average and the lower confluence model cloud. So if you want to get into Netflix, 1100 would be the first point where I would start looking. But this massive daily lower high and now a lower low is just turning us into a daily downtrend. It doesn't look great for the near term. Maybe, it's just some kind of period like we saw right in here. And we bounce off the 200-day again, and it can recover, but the PR isn't great for it right now. But it could be an interesting play. Let's just assume we get into the 200-day somewhere around there, back to all-time highs. You do have 20% to the upside. So, it could be a meaningful move, especially if you're playing that with options. But Netflix has just been on a continual tear since 2022. I mean, $168. This thing's almost done a 10x. It's crazy. Not quite a 10x. I over-exaggerated there. But, Okay, next one is ARM, and I'm assuming it's ARM Holdings. And we looked at this one a while back as well. Good old retail stocks. We're all playing the same names. So we have touch point 1, 2, 3. We are coming in for a potential fourth time breakout. It's been a lot of consolidation. I mean, since when is that? February of 24 that we've been chopping in this range. And the question is this distribution? Is it accumulation in this massive range? I mean, going from 80 all the way up to 184. This one's really volatile. I wonder if you could pair trade this with anything else, just because of these massive swings. It would be interesting to experiment with. I don't know what's coming up, for them in the news, but the one thing that's interesting is if we're just looking at this in a broad sense, we definitely made a lower low here, but now we're presumably making a higher low. And can we break out, even though we didn't make a higher high there? Potentially. And again, if that breaks through and you have room to run on the daily, you just want to see volume follow through. All right, last three are crypto requests. We have Hype, which has been doing decent on the recovery. So The last couple weeks as Aster came into play, that took some of Hype's market cap, but it's been in a decent daily recovery. Tried to reclaim this trend line and is pulling back a little bit right now with the rest of crypto. But all in all, I would say it's looking okay. We did fail this trend line right here that we were holding, but reclaimed it quickly. Lots of room to run on the daily. We got a mean reversion dot. If we look on the 4-hour, the overall structure is still very much intact for Hype. There might be a little bit of a double top thing forming right now, which could be something to watch out for. But broadly speaking, on the 4-hour for the recovery, you're just stair-stepping your way up, even if we pull back a little bit. And if you are measuring out this double top, again, you can just take those points to there. We need to break below it, but that would give you your target, and our structure would still be intact. That would actually make a lot of sense at 46 right there if the rest of crypto sees a pullback. But you did have a bit of an inverse head and shoulders here that you could target for some overhead price targets. It's not the cleanest one in the world, but it definitely is there if you draw that out like that. And then we take another line. Great. All right, and we just project that out. That would get you back up to $53. All right, next one is Aster, and you could see the period. This is a very new coin where it was taking away market share from Hype. Then the shine fell off and market share was going back into Hype during this period. And now today, or the last couple of days since the recovery, this has been outperforming again. We are just finding a little bit of resistance at these previous highs, so it would be nice. A lot of other cryptos pulling back already, but it would be nice to surpass that and then form our higher low and then continue the recovery from there. So keep your eyes on this one. RSI on the 4 hours getting close to the top of the range. So eventually, if we just make that little bit of a higher low, you would anticipate, some kind of cool off there to coincide with the price action. Okay, and last one for the day is SUI. This one on the 4 hour is looking surprisingly similar to Solana, where Solana is finding resistance on the 4 hour at that Confluence Mall center band after making a very strong recovery. This chart is almost uncanny, how you have that same kind of bump and run style pattern. Solana was a little stronger out of the gate, but very similar here. And where you would find that point of congestion right there, and that would be at $11.50. We're at $13 for SUI right now. So, if this one corrects, it will reset the 4 hour. I'm assuming the daily has a lot of room to run. Daily, has room to run to the upside. And let's just look at the broader scales, because I think there was a overhead potential breakout on SUI, right here. So if we just draw our overhead trend line, and if memory serves, does this go further back in time, or am I crazy? No, that was say. Okay, forget me. But at least we do have a couple touch points to base that off of. We're holding the 200-day moving average. That's a good sign. So if this comes back down to that $11 range, or even if it bounces above, it's building decent structure, and then it can try to attempt to break into the upper band again. And this could really be, one to keep your eye on. If it does that, it could go on a meaningful leg higher. Okay, so that is it for the charts. Again, I'm expecting some short-term cooling, but since the daily charts have so much more room to run, and we just had key overhead levels broken on a lot of names with that meaningful bottom and bullish reversal, I'm really considering any upcoming pullbacks as an opportunity to go long. Now, that's not financial advice, just as my intro graphics say, but that's what I'm doing. Anyway, I hope you all have a great weekend, and I look forward to seeing you on Monday for the weekly outlook. Bye for now.